Right, what is up everyone? So we're just gonna give a pretty quick trade recap from today's short market open. Or sorry, just during pre-market leading into market open. So we ended up catching a really nice 1 to 2.4 risk to reward or 94 pips at open. Essentially or really and truly our first TP was gonna be Asia low, but we ended up TPing lower purely off of consistency purposes. But anyway, as we put it, we actually put this message in the Telegram, which was basically before we ended up posting the P&L, basically saying what we would essentially be looking for a short, and essentially why the market could reprice lower, right? So let's just quickly get into this. Let's make this shorter rather than longer. um right, so if you were trading yesterday, you know that price had an extremely bullish reaction. Just an absolutely relentless New York Open, really and truly mitigating most of this bearish leg. Absolutely strong buy side momentum, left behind a ton of low time frame and high time frame inefficiencies. The price just failed to rebalance to. Really and truly, there were little to no continuation models either that you could have entered off. But coming into Asia today, um, we saw that price ended up manipulating higher and failed to end up basically rebalancing lower. But the momentum really began to slow down once we saw this hourly SMT inside this hourly gap here as well. So if we also draw a fib here, we can see that from this daily leg here, price ended up trading back into OTE as well, which was really great, and also back into discount. So basically, if you were looking to short or had a hard time frame bearish bias, obviously now you could short in discount. And so we had an hourly bearish gap tagged, an hourly bearish SMT inside that gap, and also the high time frame was trading in OTE, which was great. And then also now what we basically wanted to see was a rebalance. We saw that price had a bunch of generated sell side LRO here all the way down to here, and also this huge 4 hour gap was a huge attraction to us, because really and truly, if you obviously know trading, you know the price does one of four things. It rebalances price moves to rebalance equilibrium, rebalance inefficiencies, hunt liquidity, and generate liquidity. So if price were to leg higher, honestly, we would assume that obviously this being the most prominent PD array, that would have also allowed price in this leg to tag back into discount and then obviously expand higher. This 4 hour was kind of a no-brainer for if you were looking for a TP. But essentially, so if I just draw from this here, we'll just cover this. So this was as we were just framing our entry model here. This was basically relating to the 1 minute, but the low time frame could have seen a small reaction back to local buy side, which was basically this LRO here as London's high. But the high time frame narrative is now the market wants to reverse onto sell side. When trading, obviously, it's so important that you must align the low time frame with the high time frame narrative, as this is your perfect example. While the low time frame looked like it could have bounced, so for example, price left behind LRL here, this would have been tagging over 50% here. There would have been a low time frame PD array, inverse fair value gap, and then obviously that may have been your textbook setup to be basically, all right, cool, you might have drawn to London's high, price is trading in hourly gap, buy side above, whatnot. But this is why it's so important to not when looking at the low time frame, it's so important to basically zoom out and look at the high time frame to frame your entry model. Why does price really want to go where it wants to go? Have you got the right draws, and does your low time frame narrative apply to the high time frame narrative of what price truly wants to do? It can definitely give you a stronger entry model and also stronger TP levels, and obviously maximize your profit and risk to reward. So price traded into the daily gap during Asia, as we covered, with London failing to distribute above the current high, which is also OTE on the hourly, as we displayed. NQ also failed to take the current high, which was London's high, and made a bearish SMT with ES. London then delivered lower, indicating the algorithm's desire to shift order flow to high time frame external sell side draws below, as you can see here on the hourly, how strong price displays lower, and to high time frame external sell side draws below to rebalance to inefficiencies and EQ. As we know, obviously, it wasn't even just EQ; it was more or less yesterday's whole leg. But so for price to go down, the first must be manipulation, obviously, as price isn't just gonna short. So essentially, now we can break down the rest of what we said there in the Telegram. So price expanded into the hourly gap during Asia, bearish SMT on the hourly, traded into the hourly gap, left by lower London's high, distribute lower back into 50% of this, failed to take buy side, and this is obviously where we started to frame our entry model. So we got a strong 15-minute inverse fair value gap as price failed to take out London's high, or even failed to soup or even displace above the key level in the hourly SMT, which was also inside a 15-minute bearish gap, which was another confluence here. Price displaced lower back into discount, and then obviously now we would assume, okay, cool, you might want to take buy side, but obviously the buy side bullish momentum was so weak that we ended up seeing a bearish retest here back into the 15-minute IFVG, which is where we also made another bearish SMT. So now we've got two bearish SMTs on a bearish retest here. And then also from the move down, obviously now, before now you want to see price go lower. Obviously you want to see price manipulate first to, obviously, as we mentioned before, hunt liquidity and also generate new liquidity to be able to obviously expand lower, and also to rebalance price and equilibrium, which is exactly what it did. Traded back into discount, and also this would have been OTE of this leg, as we mentioned as well. So price, yep, there we go, right on the bearish retest again, where the bearish SMT was made. We had a strong 3-minute inverse fair value gap and a 5-minute inverse fair value gap. This was also a 3-minute CISD. We also got the 5-minute CISD going from pre-market into open, and then Asia's low was equal lows. And then also we had this huge trendline LRO here as engineered sell side that the price would have wanted to mitigate. And then obviously the 4-hour. But obviously due to consistency, we ended up TPing where we ended up TPing. Got a nice death candle straight at open. Obviously, again, this was more the inverse of what happened yesterday, where we saw just extremely strong buy-side momentum, leaving no real continuation models to be able to be formed. But yeah, so overall, if I just zoom back out here, right, so just as we mentioned as well, again, you must align the low time frame with the high time frame. So even though the 1 minute just before we entered the trade looked like it wanted to take our buy side, but zooming out and it showed the price failed to continue high time frame bullish order flow with clear opposing liquidity pools as generated sell side below. From yesterday's strong buy side move at New York Open that needed to rebalance a manipulation leg before expansion lower failed to take out London's high as we covered. There was a low time frame shift in order flow from the algorithm with the clear entry model towards clear draws. As we mentioned again, the Asia low with equal lows, trendline LRO from Asia's bullish manipulation leg, and also the 4-hour bullish PD ray from yesterday's New York Open. And again, just as we always mention as well, there's no point trading unless time and price has aligned. Obviously, as we mentioned, time and price, also known as macro, is when the algorithm is most volatile, because obviously then it is seeing the most settlements from institutional orders. So delivery is fastest and obviously most efficient. Time and price, obviously one of the kill zones is the 9:45 to 10:15 Eastern AM macro, but obviously market open is extremely volatile, and obviously the next one is the next hour after that, which is the 10:45 to 11:15 Eastern macro. But again, time and price aligned for us beautifully. The setup was there again, just needed the market to open. Algorithm went full whack sells towards sell side, and yeah, overall very clean trade. So we're just going to end the video here. Again, just a really quick nice trade recap covering what we took today. 1 to 2.4 risk to reward, 94 pips at open. And yeah, we called this out in the Telegram. Again, if you want to join the Telegram, it's completely free. Just comment the word join and we'll send you the link. But yeah, thank you for watching. Subscribe and everything, and yeah, see you in the next one.
See you in the next episode. Magnus out.